Hello, welcome to Books in the Biz, a podcast that looks at both the financial and operational sides of success. Please welcome our hosts, Dan Paulson and Richard Veltre. Dan is the CEO of Envision Development International, and he works with leaders to increase sales and profits through great cultures with solid operations. Rich is CEO of the Veltre Group and a financial strategist working with companies to manage their money more effectively. Now on to the podcast.
Hello and welcome to another exciting episode of Books in the Business. Rich, how are you doing this week?
Doing very well.
You are so at the time of this recording, we're getting into September. You are probably getting ready for fall tax season because now tax season is more than just once a year. How's that going?
Same as always.
Same as always. That's kind of what I figured. And we have a guest with us today, Will Sutherland. Welcome aboard.
Hello, everybody.
Well, just to explain our premise today, Will, so Rich and I have been talking and we've been working with companies on succession and succession planning and all this stuff. And I don't remember, maybe you do, Rich, what triggered this, but I think we were talking about somebody getting a massive windfall off the sale of their business and how they prevent the government from taxing that away. Yeah, I think I had asked you, okay, Rich, taxation question. Is this a you thing or is this a wealth manager thing?
I think we had a lot of conversation around qualified small business stock, and we had something else, I think. Yep. And then all of a sudden it was like, well, what do you do after the fact? And I said, not really what I have, not really when they usually call me. So After the fact, let's find out. So that's when Will's name came up.
There you go. So, Will, we brought you in to enlighten us or give us the bad news or whatever it might be. Feel free to share anyway. But essentially, that's what the conversation is going to be about today. So we're looking at companies, business owners who have now reached that point in their life. They are looking to sell their business. If there's something they can do beforehand, what could they do? If they are in that stage where the equity firm or the private investor or whatever came in, offered them this big chunk of money, and now they took it, and now they're sitting there with the check. What the heck do you do? Good
question. Those are,
is that the end of the podcast? Are we done?
Thanks for having me today, guys. So it's a great question, Dan and Rich. And again, thanks for having me on.
I'm going to throw your information up on the screen. We will definitely read that off to the listening audience afterwards, but I'll just put that up here so we can look at that for a little bit because it's such a handsome picture of you anyway.
Yeah, it's back when I was young.
Yeah, I have way more gray hair than you, man. Don't even talk to me about young.
I'm just happy I have any.
There you go.
Yeah, for the time being.
I'll keep quiet.
Yeah, right. We've got stages here. Now, to initially kind of talk to that question, Dan, I think what I'm seeing, with clients that I work with in the business world, I have a decent amount of kind of business-related work in Northern Illinois, kind of in the Rockford area around there, and a lot of family-owned businesses, a lot of multi-generational family-owned businesses that I've been working with, and I think the question is, the business was set up a certain way with that first generation. And what we're finding is, there's all these jokes about the third generation, ruining family businesses, but there is some legitimacy there that the later generations may not, want what that first or second generation wanted. And there's almost zero planning that goes into that thought. It's they come to me and say, hey, we're getting ready to sell the business. What should we do? And first of all, I say, let's go find a good CPA and a good lawyer and a good business coach and all these other things. And then my next question is, so, what time frame are we looking at? Well, next week. And you're like, okay, well, everything I just said, wipe out because none of that's going to help. So I think there's so many just beginning questions that you guys have more answers to than I do. And you guys are the kind of the front of the helicopter, which I used to fly in the Army. I mean, you guys are leading the way, and helping people prepare. That's the biggest fault that I see right now is, I mean, I'm not talking little preparation, I'm talking no preparation.
Wow.
And I think the reason being, you guys, is fear.
Mm.
It's all fear based. And I think there's also this um, kind of elusive undertow in the business industry these days where learning and being able to trust your professionals is becoming harder and harder. So I think finding the right people that you have that comfort level with, that they understand who you are. They're not trying to make a dollar off of you. They're trying to make a dollar for you.
Mm-hmm.
And in tow, then they make money as well. So I think those are some of the things in the beginning of the conversation, just talking about preparation. You know, we talk to most people and say, kind of at a minimum, if you could start planning this 3 years out, that would be great. Best case scenario, we should probably be at more like a 5 year time frame. As most of here, you know, at the table understand that when you're going through a business valuation, the standard used to be 3 years retroactively. Now there's some movement towards 5 years.
Right.
So
Well, as part of that, the COVID stuff, because COVID kind of threw a lot of things in a tizzy.
yeah, I mean, I don't know if COVID was the catalyst to this. I think it was already there.
Okay.
I don't think it made that much of a difference in my world or what I've seen. I think what COVID did, if anything, is it stalled sellers from being able to sell their business. So we had a gentleman who had an HVAC firm. He was, you know, at the time I met him, he was about 63, 64. You know, relatively speaking, he wanted to be done by 65. And we're like, well,
Mm-hmm.
this is going to get challenging. Had I met him at 60, I think, you know, it would have been a better situation, or had you guys met him at 60. But what happened was COVID jumped in there, and now all of a sudden, you know, he's looking to sell his business at 68 or 70.
Right.
And I'm sure you guys are seeing the same thing. You know, there's an age gap. There's a pretty significant age gap right now from where people used to sell their businesses to where they're selling them now. And I think COVID was definitely a catalyst to that. It created this weird bubble of 2 to 3 years where none of that happened.
Right.
And now people are scrambling. You know, like I went. So now we're talking, you know, distressed asset sales and, you know, things that you're like, oh, this is not good.
Mm-hmm.
You know, or selling companies purely, you know, for the inventory and what they have, and then walking away, as opposed to selling it for a multiple. So yeah, I mean, I think those are some of the things in the beginning. To answer your question, it's just pure lack of planning.
Yeah. And I'm in some ways glad to hear, or at least get the same information from you that we've both been preaching around. I'm sure Rich could jump in on this too, but we have been talking a lot about that 3 to 5 year window is really critical. I don't know what percentage you're seeing of businesses that are kind of saying, well, I want to sell next week, versus the ones that are trying to say, hey, you know, I'm a couple years out, but I need to start figuring this out.
I'd say 70% want to sell.
Want to sell right now. Yep.
Yep.
Yeah, that's pretty close to what I'm experiencing. I've been doing some work with some of the local economic development areas, and they are, you know, I've been preaching about this for, well, probably as long as you know me. So at least 10 to 15 years, we've been talking about succession planning and how you need to do it. And in the past, it was just like, I'm not going to worry about that now. I got plenty of years ahead of me.
Yep.
And now we're getting to that point where it's like, oh, crap. Who's going to buy this thing? And you said something that I commonly say, which is most companies are going to be liquidated for basically their assets at pennies on the dollar versus being sold at a multiple, because they haven't done that planning. So I'm glad to hear you're reinforcing that. But that to me is probably one of the bigger challenges. One of the other things that I heard you mention that I thought was interesting is don't know who to trust when it comes to professionals. Tell me more about that. What are you experiencing, or what are you hearing from your clients as to why that is?
I think it does lend back to the age gap. So these folks that wanted to sell their business at 63, now they're 68 to 70. And in a lot of cases, their trusted professionals have already retired. And so their CPA, their lawyer, their financial planner, many of these people I'm working with, I inherited from buying a business down in that area that had these people as clients.
Got it.
So I'm second generation. And I tell everyone, I think absolute minimum, whatever the story is in life, it be a birth, a death, a marriage, any of these things, there's a 3-year window to get comfortable with anything. And so no matter who your professional is, it's going to take you 3 years to get to the point where you go, I think Dan is actually telling me what I need to hear. And so I think that there's that hesitancy, because I've only known you for a year or two.
Right.
Am I really going to give you all the information, or am I going to hold back some of those gems? And I think that's a big piece of it. The other side of it, I think, is that the level of professionalism in all of our personal areas has gone down. I think so many of the newer kind of mid-aged professionals that have come up, they've been taught pretty much all sales tactics and very little implementation of anything. Their companies, will say, well, you don't need to know that. Just bring the client back to us, and we'll take care of it. Well, you don't know my client. You don't know their children. You don't know their family. You don't know their dog's name.
Right.
So I mean, so that lends back to that trust piece. So now all of a sudden they're in front of 3 different sets of people that they don't know. And I mean, I think the other piece of it too, and Richard, maybe you could probably speak to this better than I, is I have found it extremely hard to find CPAs that understand this. Other than just basic tax, processing, many of the people come out and they may go to a large tax firm, do some auditing, go out into a smaller, and then do some small business, some personal, but they all have this mindset, and no offense to your profession, but they all have this mindset of looking backwards, of looking at, hey, this is what happened, so this is what we're going to do just for now, not what are we doing 5 years from now. And so those are some of the things that I'm just seeing, and that makes me sound really arrogant, but relatively, yeah. I mean, I don't know, Richard. I mean, how do you feel about that?
I feel spot on with that. So 20 years ago, you started doing a little bit of, just so you know, because we haven't talked that much. I was a Price Waterhouse guy. So I was there at Price Waterhouse when they merged with Cooper's to become one of the biggest firms in the world.
Yep.
Right. And the mentality was different. The training was different. The push was different. So when you go and you start working with smaller firms, you can see the difference, and you can see the focus on, billable hours, and, and unfortunately that translates. And believe me, I went through all of the training and all of the licensing and all of the things that I'm not supposed to do. I'm not supposed to bash my fellow professional, but the problem that I have with that is they need a bashing.
Yeah.
They need a little kick in the tail, because the client is the focus, not the billable hour. And
absolutely,
when you get back to that client focus and you start realizing this is what the client needs, if it's expensive, tell them it's expensive. If they choose not to do it, no problem. But if they need it, you tell them that they need it. And so when you're coming down to this sale process, you need to tell people, look, do it in real language, right? There's so many people out there saying, wow, we're going to sell your business and we're going to get you all this money and it's going to be fabulous and you're going to be, and you have no way of knowing that person's actually going to do it for you. But here's the kicker. If the owner thinks it's worth $2 million, but he's only taking home $100,000 a year, there's no one out there that's going to pay them what is that? I don't even know the numbers. Is that a 20 multiple? No one's going to pay them a 20 multiple because he thinks it's worth $2 million, but he's only showing him 100,000. There's the planning that you need the 2 or 3 years to do, because if you want 2 million, you have to support the 2 million. So how do we get you there? That's what Dan and I have been preaching for. And I think even in our approach, sometimes I wonder, are we getting across to people that you think it's worth this, the numbers are saying this, and you need someone to help you make them match. Either you're going to wind up coming down a little bit, or make your numbers show that you can, that you can support something that's a bit higher. But either way, it's not going to happen tomorrow. If it happens tomorrow, you're not going to get anywhere near $2 million.
Right.
So, that
I
becomes
mean,
the reality that people need to hear.
and even like I in my industry specifically, we have mystified it with big words and acronyms. So people don't understand. It's like the army. Like we talk in a completely different language. And so that's one of the things that I'm moving forward. We're going to try to build a very educational stance on understanding the words used. Things like EBITDA. I mean, you're not going to find hardly any small business owner that has any clue what that means.
Mm-hmm.
And I mean, you got to break it down letter by letter. I just did this last week. Really interesting firm down in Rockford. They make professional athletic jerseys, and I mean for everybody, like NFL, NHL, college football. Really, really cool family story. Just rags to riches. I mean, they built this thing from the ground up. But why would they have any understanding what EBITDA means? And in that case, we're just trying to create a transition or a succession plan to their children. Still tax involved. And that's what we're talking to them about. It's like, listen, you can't just gift it. I mean, no matter how much you want to, or you can't just die and they get it. They're having those mindsets, and you're like, no, the government's still going to take their chunk. And I think that those are the things that people need, like you said, just really transparent, forthright education on. And there's a lot of upfront work that the three of us will do and not get paid a dime for. To do that, but you'll build the trust and you'll build the clientele and you'll get the right things done. But that's the one thing that I struggle with is you get to your point, you'll have other folks come in and, start throwing up big terms and basis points and all this other stuff. And these poor people just kind of nod their head because they're thinking, well, I don't want to look like I don't know this.
Right.
So it's almost embarrassing. We're like, I've had a couple different clients where I've stopped and said, I'm sorry, I just used a bunch of acronyms. Do you know what those mean? And one of them was like, oh, thank you so much. I have no idea what you're talking about, Will.
Well, at least you recognize that, because a lot of those guys, they just keep throwing them out, just either assuming they know or, again, burying them in supposed knowledge, I think, to confuse people.
And again, that just goes back to, you have to have your trusted partners, that whole ring of a business coach, a lawyer, a CPA, a financial guy, and an insurance person. And not any one of them can do what the other people do. Right. I always tell people I'm smart enough in all of those categories to really do damage. It's the thing where I work with these people and I learn from them. My job is to help quarterback much of this. But that being said, they each have individual specialties that I have no clue what they're doing. That's why we trust them. Is that there can be no one person in that scenario that gets it all.
Yeah, we would agree on that end too, which is why we've been building up the stuff that we're doing with XCXO really to help with that. Will, question for you. So, you talked a lot about all the other stuff that you don't do, but when you look at it from a financial wealth building approach, maybe explain your process or explain a process that really people should look at, because a lot of what you focus on is planning, and wealth building is planning. And even without us in the room, you still have a process that you would like your clients to follow. What would that be?
At the very beginning, if I'm lucky enough to catch them at 3 to 5 years beforehand, working with somebody like you guys. But Dan, you brought this to me in the past, and I've just used it myself again recently. But finding a simple book like Vivid Vision, and understanding what is your vision, what is it that you want to happen, not both professionally but also personally. Because until we understand what that vision looks like, I'm shooting a shotgun pattern, and you want me shooting rifle rounds. So our process is really to start building that, if we get the chance, farther back, and understand, as we get closer and closer to to that sale? Are there things that we're doing in the process? Are we managing the P&L, the balance sheet? Are we in the right? And this again, Richard, this is more your world, but are we in the right entity? I just ran into somebody the other day they're a C corp owned by an S corp, and I'm like, I have no idea what you're doing. But hey, let's go learn. But understanding some of those things, and then being able to get to where you're getting to, Dan, where all of a sudden the trigger does get pulled, and now there is a transfer of wealth. And at that point in time, we should have done our homework and understood. By the time we got there, we understand what their income needs are. We understand what their liquidity needs are. We understand, ultimately from that 1 to 3, I always say 1 to 3 years is about the max that we can plan for somebody. Anything after that's kind of unicorns and fairy dust, but we do. We plan out to everyone dying at age 95 and having hundreds of millions of dollars to pass on to their beneficiaries. But that being said, it's getting into that process of that 3 years before the sale and then 3 years after the sale. Really understanding cash flow at that point in time, I think, is probably one of the most important pieces of this. And then the other ones, the liquidity, the growth, the other things then come into play. But until I understand their cash flow needs, I'm kind of out there flapping in the wind. And that's where we dive in and look at, we use different software platforms to help them dive in and, log in their expenses or be able to understand where their expenses are going, where their growth ratios are, all the things that go along with that. But I always tell people at the end of the day, my job is simple. It's money in, money out. And we've got to figure out what that is first. Then I can tell you all the other things that we might be talking about, using different investment vehicles, using different estate planning vehicles, all the things that now mitigate what we're talking about today really is how much the government's going to get. Right. But that's it's a soup to nuts process. I am not an investment advisor by any stretch of the imagination. The investments are the tools we use to implement the plan we put together.
Got it. Excellent. Good. Well, why don't you tell us a little bit, because we didn't get into your background a little bit. So I'm going to pull your bio up again for those who are watching. But why don't you explain that to us a little bit? How'd you get into this? Because I know you from a previous life, and that's kind of how we met. And then all of a sudden, hey, now you're a financial advisor.
Yeah, purely by accident. It was a midlife crisis. My background. I spent some time in the military. Had the best low-paying job ever, being a helicopter pilot, and got into the airlines right after that because that was the dream. And then 9/11 kicked me out of the airlines. And as you know, I fell into a job backwards in medical sales with a friend from the Army helped me get that job because I needed a paycheck.
Right.
And I did that job for 5 or 6 years. And that was an arena at the time, you could make a significant amount of income. But it was a situation where I was always tertiary. I was in the back of the room, helping the tech put together implant or instruments and implants. And I was never the prime mover. And unfortunately, I'm a little bit too type A ADHD. So a friend of mine at the time was working at a big wirehouse, R.W. Baird, and asked me if I'd like to come and work there with him. I really hadn't thought about it. But, after kind of some super long deliberation of about 2 weeks, I asked Janie, hey, would you be okay if I stop making $300,000 or $400,000 a year and I might make 30 in the first year, maybe? And bless her soul, she went along for the ride. And then I got in and found out what I didn't know. It was really a situation of, wow, this is not what I thought it was. I thought this was going to be about investment management and all these other things. And no, all they teach you is sales. Go get in front of people, get their assets, bring them in, and we'll show you how to manage them. Didn't love that model, didn't love that. So I jumped out and moved into kind of one farther step out, worked for an IAR as a larger insurance company, Mass Mutual. Still a situation where they were trying to get me to sell whole life and annuities and things that I may not have had the use for or the greatest belief in. And then finally decided to break off and just do it on my own. So that's when I started Three Pillars, 15 years ago. Started my own RIA and started building to where we're at. And then I just launched Anders Capital, an investment company, last year.
Nice.
So yeah.
Well, good. Well, again, thank you for joining us on this. So to get a
Thanks for
hold of
having
you,
me.
what's the best way to do so, Will?
Either through my email, which is wsutherland at threepillarswm.com, which is on obviously on the bio there, or just give us a call at 608-352-7125 and set up a time to talk. I always tell people there is no commitment. There is no, I'm not going to sell you a thing, probably ever. It'll become apparent what you want and what you need. But really, everything with us starts with a conversation. We want to get to know you, and we want you to get to know us, and figure out, is there, any. I always tell people, if I can't leave the room leaving you better than when I met you, then we shouldn't be doing anything together. At that point in time, it doesn't make any sense. So that's kind of my goal in every meeting or every interaction, is like, did I just, and again, it doesn't have to be work, doesn't have to be anything. It's just, did I leave that situation better than when I entered it?
No, that's awesome. That's great. Kind of in line with some of the stuff that we do here, so definitely appreciate that. Will,
Absolutely.
thank you for joining us. We appreciate having you on, and
Thank
hopefully
you
we
for
can have
having
you
me.
back. Well, love to have you
Love
back
to.
again. I think what you do is in line with what we do, and if you come up with anything that is of interest to us, let us know, and we'd be happy to have you on again.
I
But
think a great conversation, Dan, in the future would be to talk about private equity. It's an area that
nice.
I've developed quite an acumen, and it's an area that people know nothing about, and everybody can participate in it. They just don't know it.
Got it. No, that sounds like a good one. So we will plan on that. Well, thanks again, and we will see you next time. All right.
All right, thanks, guys. Have a great day.
You too.
Want to boost your sales and profits, but need the talent to help you grow? XCXO is a one-of-a-kind platform to find skilled fractional executives to help develop your team into a high-performance powerhouse. Fractional leadership is a great choice when you consider the average executive-level candidate can cost you hundreds of thousands of dollars in salaries, benefits, and incentives. XCXO finds you the executive and utilizes their talents to build your team's experience, all for a fraction of the cost of a full-time C-suite leader. Contact XCXO today to fill the gaps in your leadership team. Visit xcxo.net to learn more.